Welcome to Trading an Edge, the podcast where we break down the psychology, mindset, and system of elite trading. In this episode, we're diving headfirst into a truth that separates consistent winners from everyone else: patience and discipline. It's often misconstrued as this elusive trait, something you either have or you don't. But our sources suggest something far more profound. We're going to pull apart why consistent profitability so often feels just out of reach, and how truly understanding your brain, your deep-seated values, and, importantly, your expectations can fundamentally transform the way you approach the markets. Here's the disruptive truth we're unpacking today. Discipline isn't missing, it's just misplaced. Our mission is to uncover why you might be struggling with patience and discipline, and what concrete, actionable steps you can take to, well, recalibrate your entire approach.
That's exactly right. We'll explore this challenge from two critical angles. First, the robust structural elements of your trading framework, like your plan. And then we'll drill down into the deeper mindset elements, dissecting the psychology that truly dictates your behavior. This isn't about vague advice, it's about a clinical, actionable understanding of peak performance.
Okay, that's a powerful statement. Discipline isn't missing, it's just misplaced. Can you elaborate on that? Because, for so many traders, it feels like a personal failing, doesn't it?
It's anything but a failing. Our research reveals a powerful yet often overlooked truth. Every single one of us already possesses immense discipline, really. It's simply channeled toward what we truly value most deeply. Think about it. If you find yourself struggling with consistency in your trading, take an honest look. Look at other areas of your life where you demonstrate unwavering discipline. Perhaps it's your rigorous fitness routine, maybe your uncompromising commitment to family, or a demanding professional pursuit outside of trading that requires immense focus and follow-through.
So this isn't just a feel-good platitude, then. What does this self-reflection actually achieve for a trader? How does that help?
This deep introspection helps you identify your underlying, often unconscious, true value system. This isn't theory, it's fundamental human behavior. The critical next step, as our sources highlight, is to then consciously forge strong, almost visceral associations between your trading and those profound personal values. For example, if you're deeply disciplined about securing your family's future, consciously link trading as a powerful, necessary tool to achieve that. Don't just think it, feel it deep down. Our data actually shows that traders who link their trading habits to personal values show something like a 2x increase in consistency.
Wow, 2x.
Yeah, because this connection naturally redirects that existing powerful discipline directly into their trading life. It dramatically improves focus and execution. It's not about finding discipline from scratch. It's about activating and redirecting the discipline you already command.
That makes so much sense. Okay, so we're not trying to conjure something out of thin air. We have it. But if we possess this discipline, what's actually happening internally when we fail to apply it in our trading?
Yeah.
What's the brain doing during that moment of impulsive action or a lapse in patience?
Yeah, you're hitting on a core mechanism there. Think of your brain as having two primary operating modes in high-stakes environments like trading. It's a bit simplified but useful. On one side, you have the prefrontal cortex. This is your advanced executive control center. It's responsible for patience, for the meticulous execution of your trading plan, for rational decision-making, long-term goal adherence. It's your calm, rational captain at the helm.
The logical part.
The logical part, exactly. But then there's the amygdala. This is your brain's primal emotional rapid response unit. When this part gets activated, it essentially floods your system, leading to erratic, impulsive behavior and a dangerous tendency to deviate from your carefully crafted plans.
That fight or flight you mentioned earlier.
Yeah, precisely. It can trigger a visceral fight or flight response, leading to knee-jerk, often disastrous decisions in the volatile market. Every trader experiences moments of both being patient and disciplined. That's your prefrontal cortex in command. And then being erratic and impulsive. Well, that's the amygdala taking the wheel. The absolute imperative our sources make crystal clear is to consistently empower that prefrontal cortex. Keep it in charge.
Okay, so if the prefrontal cortex is the goal, what's the very first concrete structural pillar we need to put in place? What helps ensure it remains in control, especially when the market tries to pull us off course?
It's non-negotiable. You must establish a proven mechanical trading plan and cultivate complete, unshakable certainty in its effectiveness. This isn't theoretical, it's the absolute bedrock.
Okay, certainty, how do you get that?
Gaining certainty. This isn't about passively accepting someone else's strategy or taking their word for it. No. You must gain certainty in your trading edge through your own rigorous back-tested data. You have to prove it to yourself beyond any shadow of a doubt.
And when you say mechanical, What does that really mean here for a plan? Like, how mechanical?
It means absolute clarity. Your plan must precisely outline your entry criteria, your exit strategy, and your robust risk management rules. Period. You need to know precisely how you're getting into a trade, how you're getting out, and exactly how much capital you're risking on any given trade, including clear rules for scaling your risk up or down based on market conditions or, say, your account performance. The objective is to make your decision-making so objective, so mechanical, that it leaves zero room for subjective interpretation or emotional interference in the heat of the moment.
And what happens, clinically speaking, when a trader lacks this certainty? What's the direct consequence for their discipline?
The trap of uncertainty. It's profound. Many traders lack patience and discipline, not because they're inherently flawed people, but because they don't possess this deep, visceral certainty in their own plan. They step into the market without a clear roadmap, and the sheer volume of potential decisions, the noise, it instantly overwhelms the brain. This triggers the amygdala, initiating that reactive fight-or-flight response we talked about. You start to see setups that sort of resemble your plan. Or worse, you justify taking trades that are unequivocally outside your defined rules. Ignoring your trading plan when you're uncertain. It's like crossing a minefield blindfolded, just because you're feeling rushed or impatient. It's a direct, predictable consequence of internal uncertainty.
So the pathway to discipline here really is paved with absolute certainty in the plan.
Precisely. The power of certainty works inversely. It's the antidote. When you build this unshakable certainty in every single component of your trading plan, your entry, your exit, your risk management, you actively empower your prefrontal cortex. This is the part of your brain that is inherently patient and disciplined, and it will stick to a plan it trusts implicitly. It wants structure. Failing to stick to your plan isn't a sign of weakness. It's an undeniable feedback signal. It's telling you that you are fundamentally uncertain about its effectiveness, period. It means you must go back, review, refine that plan until it truly earns your unwavering trust, until executing it consistently becomes, well, almost a foregone conclusion.
Okay, that covers the structural side, the plan. But beyond those elements, our sources really dig into the mindset piece. What's truly driving that feeling of impatience in trading? How do our expectations factor into that equation? This feels like it delves into some deep subconscious territory.
It absolutely does. Impatience isn't some random flaw, it's a symptom. A symptom of unconscious expectations rooted deeply in pleasure-seeking behavior. The untrained mind, and let's be honest, that's most of us starting out, is constantly seeking immediate pleasure and desperately trying to avoid pain. This primal drive leads to the creation of unrealistic, one-sided expectations about trade outcomes.
One-sided expectations, like only seeing the potential win.
Exactly. This is the illusion of fantasy. When you attach these elaborate fantasies like, securing that massive funded account overnight, achieving life-changing profit from one trade, or maybe gaining social recognition, when you attach that to a single trade's outcome, you're basically setting yourself up for an impulsive, pleasure-seeking drive. And guess what that activates?
The amygdala again.
Bingo. The amygdala. You are, in essence, unconsciously manufacturing your own lack of patience and discipline by projecting these unrealistic benefits onto an inherently uncertain future.
So it's our internal narrative about what a trade should deliver for us, rather than a clear-eyed view of what it actually is, a probability game.
Precisely. Our sources emphasize a fundamental, inescapable truth. All things have two sides. Every single trade has potential gains and potential losses, periods of winning and periods of setback. The shiny object of fast, easy, perfect wins is an illusion, a dangerous one. It exists only in human imagination, nowhere else. One-sided outcomes simply do not and cannot exist in real markets. And furthermore, it's not just about future fantasies. A profound lack of patience can also stem from subconsciously logged, painful past experiences.
Like what? Could you give an example?
Sure. Let's say you were patient in a past situation. You waited meticulously for your perfect setup, but the trade took off without you. You missed out on a huge profit. That negative experience, that feeling of loss, can create a conditioned aversion, almost an allergy, to patience in the present moment.
So you jump in too early next time to avoid that feeling.
Exactly. It drives impulsive, reactive behavior, a desperate subconscious attempt to avoid repeating that past perceived pain. Becoming viscerally aware of these projected expectations, both the pleasurable fantasies you're chasing and the painful memories you're running from, is the absolute key. It's foundational to developing genuine patience and profound emotional control.
Okay, so if impatience stems from these deep-seated expectations or even these past unaddressed experiences. How do we actually gain control? How do we make that shift to a more grounded approach, especially in the heat of the moment? It sounds like we need to almost reprogram our internal responses.
The core shift, the absolute imperative here, is to transcend outcome-based thinking and fully embrace process-based thinking. That's the battleground.
Outcome versus process. Break that down.
Outcome versus process. Trying to guess the market, predict the next move, avoid losing while constantly chasing winning. It's a futile, self-sabotaging pursuit in trading. If you've traded for any length of time, you know this cycle. It leads to painful losses and those awful boom and bust periods. Instead, you define your edge based on your rigorously back-tested data. You implement it into a mechanical trading plan. And then your sole, unwavering focus becomes consistently executing that process. That is where true patience and discipline reside. It enables you to take trades only when the market aligns precisely with your plan, not when your emotions scream at you. It's about becoming a master of execution, not some failed prophet of prediction.
And how do we begin to uncover those subconscious patterns you mentioned earlier, those charges logged in your mind? How do we build that vital self-awareness that allows us to actually break free from these old triggers?
Right, the awareness of drivers. Your impulsive and instinctive behaviors aren't random acts of self-sabotage, even though it feels like it sometimes. They are driven by very specific, often subconscious patterns. You need to build profound awareness of what's truly driving your behavior in the moment. When we talk about those charges logged in your mind, think of them as powerful emotional imprints. Maybe a vivid memory of a missed opportunity, or the intense rush from a lucky, unplanned win that your subconscious holds on to. And these directly influence your present actions, whether you realize it or not.
So how do we become aware? What's the practical step?
Self-accountability. It's about asking the hard questions right when you feel that urge. When you feel that surge of impulsivity, you must pause just for a second and ask yourself, okay, wait. Am I trying to avoid some past pain right now? Does this situation feel like something that happened before? What is that specific emotional charge in my mind from a past experience that's compelling me to act this way? Or conversely, what specific pleasurable experience am I trying to recapture from the past? Am I chasing that feeling? Where have I felt that exact rush before? And how is that memory logged in my subconscious pushing me now? Building this relentless self-awareness about the underlying charges in your subconscious is incredibly important. It's not easy, but it gives you the power to dismantle them, to disconnect the trigger from the reaction. Ultimately, this deep awareness, aligned with your core values and grounded in emotional realism, that forms the foundation of truly resilient trading. A grounded trader accepts both sides, wins and losses, and acts with clarity, not illusion.
Wow, what an impactful deep dive today. Seriously powerful stuff. We've explored how discipline isn't about just trying harder, gritting your teeth, but about aligning your trading actions with what you already value deeply. That's a huge shift. We peel back the layers of your brain, understanding how the prefrontal cortex and amygdala influence your decisions, and why a rock-solid, trusted trading plan is your absolute first line of defense. And crucially, we uncovered how impatience often stems not from weakness, but from chasing those one-sided fantasies and those unaddressed, lingering past experiences, those charges.
And if we connect this to the bigger picture, it's just undeniable that true trading mastery isn't just about charts and strategies. It's fundamentally about mastering yourself, your internal world. And this raises an important, maybe uncomfortable question for you, the listener, to really reflect on. If you only act with discipline when it's easy, when the market aligns perfectly or the expectation of pleasure is high, or when you feel absolutely no internal resistance, then that's not discipline. Let's be blunt. That's just comfort. So where are you truly challenging your comfort zone in your trading right now? Where are you practicing discipline when it's hard?
Powerful stuff to chew on indeed. Thank you for joining us on this deep dive into the psychology of elite trading. We really encourage you to reflect on these insights and begin forging that deeper connection between your trading actions and your true fundamental values.
Trading an edge where psychology meets profitability,